Hello, Shaurya. How are you?
Hi Champak, all good, you say?
All good, Shaurya. What are you looking at?
Well, I'm looking at my portfolio, just taking a look at how it's going on in recent times.
Shaurya, last time you told me about a healthcare company. It struck me that pharma companies have bigger businesses than hospitals. So can you tell me about a pharma company that can give good returns?
Yeah, in fact, I was also thinking to tell you about such company. So today, I will talk about Dr.Reddy Limited. Now, first of all, let us look at the business of the company.
Headquartered in Hyderabad, this company was established in 1984 by K. Reddy. It started as a supplier to other pharma companies. However, today it is one of the prominent drug manufacturing company of the country. It is one of the top 10 pharma companies of the country. The company is in branded generic and API business. The branded generic drugs of the company are available in more than 30 countries besides India. More than 50% of the company's revenue comes from this business. Besides India, Russia, China and Brazil are prominent markets for the company.
Okay, tone it down for me. All this API generic is going over my head.
Okay, fine. Don't worry. I will explain you everything in a very simple language. For pharma, words like API, generic medicines and patent medicines are very important. API means active pharmaceutical ingredients. They are base materials or chemical compounds for medicines. So, if you buy crore from the shop, then its API is paracetamol. Now, paracetamol API is made by some other company and crore from it is made by someone else. Right now, big chunk of API in India still comes from China. Hence, there is a huge scope in this business.
Okay, now let us understand patent and generic medicine. When a company does research and development to discover some new medicine, then it gets the medicine patented as per international law. Patent means that without permission, some other company cannot produce that same medicine. Even if they produce it after taking permission, then they have to pay royalty to the company that discovered the drug. But this patent is available only for a limited period. After that, other companies can also produce these medicines. So after the patent expires, these are called generic medicines. Any company can produce this. Hence, you would have noticed that patent medicines are very expensive while generic medicines are quite cheap. One more word is used and that is a biosimilar. Biosimilar and generic medicines are made after the patent is over. There is a difference between the two. The difference is that generic medicines are made on a similar formula, but in biosimilar, the formula can be modified.
Now, you might be wondering what branded generic medicines are. So, let me tell you about it. See, normal generic medicines are known by the chemical name, while branded generic medicines are known by their brand. Like atorvastatin, calcium is generic medicine that Pfizer sells under Liptor brand name. So now, you must have understood that for medicine company API, patent and generic are quite important. Looking at Dr.Reddy's portfolio, it has generic medicines, APIs, custom pharmaceutical services, biosimilar and complex formulations. Talking about its business, it has 13 facilities of formulation, 9 API manufacturing facilities, 1 biologic facility and R&D centers across the world.
Okay, I got it. It's a very popular and strong company. But what about its financial performance and recent times?
Yeah, I will tell you about it.
In FY23 Q3, DRL launched 5 new products. With the strengthening of the dollar and especially in the US market due to high demand of Revlimid, the company's earnings year on year due to steady demand grew by 27.2% to reach 6,331 crore rupees. Similarly, EBITDA margin of the company has increased by 6% to reach 28.7%. During the same period, the company's profit went up 81.1% to reach 1,251 crore rupees. The company has a cash surplus of 3,400 crore rupees. And talking about the 9 months of FY23, the company recorded sales of 18,291 crore rupees. During the same period, EBITDA increased 48% to reach 5,677 crore rupees and PAT went up by 56% to reach 3,548 crore rupees.
Okay, I have understood that company has strong business, but what about its future? Tell me that too.
Okay, sure. Let's talk about it. See, despite current base, the company is expecting to grow at a rate of 5 to 6%. Besides this, company is looking to launch 30 new products. DRL has a strong pipeline of 75 abbreviated new drug application whose approval is pending. This will help in meeting the company's long-term objectives in the US. On the other hand, in biosimilars, company in fourth quarter of FY23 will launch pegfilgrastim. The company will launch this product in association with Fresenius Kabi and will get royalty on revenues from it.
See, Dr.Reddy is a large player operating in the US market, especially in the generic space and in specific product molecules. In fact, they have launched Revlimid, which is a very big blockbuster drug, and I think that has been a very strong profit contributor to them. Our belief is that Revlimid should do exceedingly well even in FY24 and should contribute significantly to the profitability of the company. If there are no roadblocks in terms of regulatory issues, I think FY24 should be a very strong year. And US markets, fortunately, in the last 6 to 12 months, have not brought about any major FDA-related issues for the company or any Indian companies. So, in that aspect, I would believe that the outlook seems very promising. And currently, the price is also trading at fairly attractive valuations. If you look at the potential of Revlimid and the existing kind of generic portfolio, so net, it's a export-oriented kind of business. Very little on the domestic market side. But clearly, I think if earnings trajectory is more than 20-25%, you could see a good kind of re-rating in the stock in the next 12 to 18 months. See, the biggest challenge in the US market is from some regulatory issue. If the demand also in the US market weakens, because US is a large market, there is always going to be some pricing pressure on drugs because it is a large market where, unless the company has got some exclusivity on a particular drug, margins always remain under pressure. So I would believe that, Dr.Reddy at least currently remains in a sweet spot considering the Revlimid kind of earning potential for the next 12 to 15 months. So I think at least in the near term, no major kind of roadblocks or negatives are seen. If there is some kind of regulatory issue in the US market, then it could bring a kind of a problem in the earnings growth trajectory for Dr.Reddy. So these are the main challenges which Dr.Reddy will face. And I think as of now, these challenges, only remain on paper. The execution is good. And therefore, we believe next year, that is FY24, also should be an equally strong year for the company.
Okay, I get it. Company has very good prospects, but there might be some issues also with the company. What about risk and challenges for the company?
Yeah, relax. I will tell you everything. I won't just show you a rosy picture. I will leave no stones unturned. Listen to it very carefully. Don't say afterwards that I haven't told you anything.
See, I think pharma sector has underperformed significantly. Even today, as we speak, the pharma sector has not delivered those kind of returns to investors. I think Dr.Reddy presents a very good opportunity in the fact that FY24 we could see earnings growth of at least 20%. Our estimates are that company will record earnings of roughly 275 to 280 rupees. And based on that, we believe that this company can get a earnings PE multiple of at least 18 to 19 times, which gives us a reasonable target of at least 5,050 to 5,100 over the next 12 to 18 months. So I think it's a good choice, provided investors can give a little time frame to this stock. It's a well-established business with a good regulatory kind of regulatory product pipeline, and many new molecules are expected to be launched in the next 2 years. So given that, I think the stock looks attractive from a long-term point of view.
So overall, we can say that Dr.Reddys is a pretty good company. It has given good returns to its shareholders. Its shares has very good outlook. In next 1 year, experts feel that share can increase by 12%. If you want to keep pharma stock in a portfolio, then you can bet on this stock.